Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on? Well, they're still trying to push the market up to a new record high, right? A new record high. That's where they want to get it to. We had that downgrade of our AAA rating. Our government's the first time in history no longer AAA rated. Why? Because they can't pay the debt back. Now, if we can get a few more of these downgrades, I think we can push the market up to new record highs. If we can get the economy to totally fall apart, I think we can push the market up to new record highs. You see, what we've got is a sick, perverted game that we're playing, right? It's Keynesian economists at work. You see, the only thing that matters to this stock market is getting more debt. More debt matters. If we can get in more debt. Now, why would we get in more debt? We get enough downgrades, we got to stimulate, right? So we print the money, we go farther into debt. You can look at the HYG. That's the real debt that you want to look at, because that's the junk bond debt, right? That's the debt that the government's buying right now. They're buying the regular bonds too. They just bought $40 billion worth of the regular bond market. We have no other buyers. See, we got to get more debt into the marketplace. Now, what do they do with the debt? Well, they take the bonds, right? They sell more bonds into the junk bond market, and then the corporations take that money and they buy their own stock back, trying to make it go higher so the CEOs can get their big bonuses. You see, if we can get the country downgraded a couple more times, maybe we get downgraded to a B or a C, we can really get this market to go up a lot farther. If we can get the economy to totally collapse, then they have to pump more debt into the system. We can get the stock market up even farther. We can have a blow off top before the big rug pull comes. But mark my words, the big rug pull is going to come. Now today, let's move over to the real estate market. All right, so the real estate market is pretty much the same, right? Okay, you see, everybody knows that we're in this big bubble and we could fix the problem, but nobody wants to fix the problem. You see, the problem is, well, the Federal Reserve is the problem, right? The U.S. government printing $37 trillion of debt. You see, we're the generation, us baby boomers, right? Every generation before has left the country better off than when they entered it. We're leaving the country much worse off, much more indebted than when we entered it. And you young people, well, you'll figure that out down the road when you know that you're totally hosed and you have to pay for all the debt that we rung up, right? Well, that's what this big bubble is. It's a debt bubble, right? And it blows up the housing market. Biggest bubble ever. Now, we were in a bubble back in 2008, and that came down, and they said they're going to print money to blow the bubble up bigger. That was actually the plan. And guess what? The plan worked. We got this bigger bubble, right? They held interest rates at 0% for 16 years. That allowed the corporations to come in and be the buyer of these houses, right? They took 25%. One out of every 4 houses, they took it off the marketplace. Why? Because they had the free money from the government, right? They had the free money. So the government was responsible for the corporations coming in, taking the free money and competing with the home buyer, right? So 1 out of 4 went to corporations, right? Now, the ones that were lucky enough to get it, well, what did they buy it with? They bought it with a government loan, right? A government loan, FHA, 3% down. Since 2008, that's increased 1,000%, right? I mean, everybody's buying with FHA, 3% down, guaranteed by you and me, right? The taxpayer, right? And of course, the people that buy the houses, they get the tax breaks. There's tax breaks for buying a house compared to being a renter. You know, the poor people, they don't get no break. But you know, the rich people, we want to give them some tax breaks, so we give them some tax breaks. And what else has the government done? Well, you see, the Federal Reserve, they got this bright idea. Well, we're going to buy $3 trillion worth of these mortgages, right? We're going to buy them up and they're going to put them on the books for 30 years as they pay them off. Well, then they can roll off. But we bought $3 trillion to keep the rates artificially low at 2.8%. I know you're locked in, right? All right, so now we're back up here at 7% because they realized they messed up. They messed up really bad. But this is an easy fix. It's just painful, right? How would you fix it, Tall Mike? Well, this is how you would fix it. You'd take away the FHA, get rid of Freddie and Fannie, right? No longer let the government guarantee the loans. Government no longer guarantees the loans. What would that do? Well, that would push those rates up even higher than the 7% we're at. Well, why would we want that, Mike? You want to fix the housing market, right? You take away the tax breaks, for owners of houses, right? Well, that would help the people that are renting, right? I mean, put them on the same playing field at least, right? What would you do with the $3 trillion in mortgages? Well, I would sell them onto the marketplace. But Mike, that would crash the housing market. Yes, it would. At some point, it's going to reset. Now, we know they're not going to do the right thing. Don't worry about that ever happening. No. We're going to print more money and try to keep the house up here. Now, you'll notice that house prices have already crashed 50% compared to real money. Compared to gold, house prices have dropped 50% in the last 3 years. Now, if you were one of the people that went out and bought a house in the last 3 years, 80% of you got buyer's remorse. Buyer's remorse big time. Most of you are trying to dump it back on the market, trying to get out of it because you realize you could rent for half the price that you're paying. Your friends are going on vacations. They're out partying, but all your money's going into your house. You're trying to dump it onto the marketplace. You're trying to get out as fast as you can. All right. So this is how it's going to play out. See, that's not how it's going to play out. There's no way the government's going to take away the guaranteed loan. There's no way they're going to sell their $3 trillion in mortgages, right? There's no way they're going to take away the tax breaks for real estate. So it's not going to play out that way, but we are going to get a reset. It's going to be price discovery, right? And I want to talk a little bit about that right now as to how it will play out, as to how these houses will come down in nominal terms, not just in terms of gold. Now, don't get me wrong. In terms of gold, your house is going to keep crashing, right? You're already down 50% in terms of gold, but now we're going to crash in terms of nominal. Right? Okay, let's say the average price home, I don't know, 400,000, let's call it, right? We're going to have a debt devaluation. Do you know what a debt devaluation is? Well, do you know how much debt there is in the world? Thing is, nobody knows, right? Some estimate 300 trillion. Okay, that's a good guess. Maybe it's 400 trillion. Maybe it's 500 trillion. Nobody knows. But when this debt bubble breaks, and it's a big bubble. They'll keep blowing the air in there, right? But eventually the debt bubble breaks, right? It's called debt devaluation. Now, maybe we go from 500 trillion down to 200 trillion, 250 trillion. Cut it in half. Cut the debt in half. What would that do to your house? Well, what is debt, first of all? Let's talk about that a little bit. Now, bonds are debt, right? Okay, so you got the bond market. Bond market is debt. Okay, now the bonds would be coming down by 50% because the debt market came down from 500 trillion down to 250 trillion. So the bonds would come down by 50%. You could look at the TLT, right? I think that's trading around, I don't know, let's call it 90. Let's call it 90. TLT's at 90. TLT would drop down to 45. Now, what would that do to interest rates? Oh, interesting. They'd go up about 10, 12, 14%, right? This will happen, guaranteed to happen. When this debt bubble breaks, bonds are going to crash. They're not going to go up. They're going to crash. The problem is in the debt market. You see a lot of people like Harry Dent. He doesn't understand. He thinks you want to be in bonds. No, you might see a TLT go from 90 down to 40, and it might happen overnight. When it happens, it's going to happen really fast. It's not, right now it's little by little by little. Then it's all at once, right? Okay, that's how it's going to play out. I mean, you could wake up tomorrow and have the TLT going from 90 down to 45, have interest rates go from 4.5%, let's call it, up to 10, 12, 14%. And you're like, oh my God, what just happened? Well, the debt bubble broke, right? The debt bubble broke. That's what happened. When the debt bubble goes, your house is going to collapse. You see, I say 40%, but that, I'm just being polite. I don't want to scare anybody. It's really going to be 60 to 80% in nominal terms. Because why? Well, because the currency goes away at that point. It's called currency devaluation also. It's a debt devaluation. The debt bubble pops. It gets cut in half, goes from 500 trillion down to 250 trillion. Debt bubble pops. Currency goes down, goes down, becomes worthless, right? Now, once again, I keep telling you, this is why you want real money. This is why you want gold. This is why you want silver. You want the real money. When the debt bubble pops, it's going to be ugly. It's going to be real ugly for real estate, right? Because mortgages are going to run not 10%. They're going to be closer to 20%. 20% mortgages. But Mike, my house is free and clear. I don't need a mortgage. And that's great because your neighbor that has a mortgage, he has to sell because he got a divorce and he's got to move the house. And there's no buyers at 20%. The only buyers that are left are cash buyers because I don't even think you're going to be able to get a mortgage at 20% if you still wanted one. I don't think you can get one. Now, my first mortgage was up around 18%, but 20%, I don't think they're going to be giving them out. I really don't. I don't think there's going to be money to be giving them out. So it's going to be cash buyers only. Cash buyers are going to see the free fall. They ain't going to be buying accepting for 20 cents on the dollar. So you're sitting in that $1 million house that you got free and clear, right? Well, your neighbor just sold his, which is nicer, bigger, and better for $200,000. Your house is now worth $200,000. But don't worry, yours is free and clear. And if it's not free and clear, at least you're locked in at 2.8%. Now, don't get me wrong. This is not going to happen tomorrow. It could happen tomorrow. When it happens, it's going to happen really fast. You see, when the debt bubble pops, my take is that 500 ounces of silver will be able to be traded for the average price home. Now, back in 1980, it took 800 ounces of silver for the average price home. But we're going to overshoot that because the debt bubble is so much bigger now. It's huge. It's massive. It's going to come apart. This Keynesian experiment has failed. Now, when it goes, it's going to be disastrous for just about everybody on the planet. World is going to get ugly. I'm not rooting for this. I'm just telling you what's inevitable because our leaders have let us down. They see this coming. If they don't see this coming, they're too stupid to be a leader. So they know it's coming. They know it's coming. They just don't know what to do about it because really there's nothing to do about it. Maybe prayer. Prayer might help, right? Maybe we can extend it a little bit longer, but it's coming. Going to happen in my lifetime. Going to happen in your lifetime. We're going to get to see it. So the reset's going to happen. That's what they're talking about when they talk about the reset. Shh. I don't know if I can talk about this on YouTube. They get a little upset with me sometimes. I get shadow banned and stuff. But anyways, this debt bubble, when it blows, 500 trillion becomes 200 trillion. Your house goes from 1 million down to probably about 100,000. It's going to be disastrous for everybody. It's going to be the ugly world that we're going to be living in at the time. And it's caused by our leaders not correcting the problem now, not doing the right thing now, staying with the Keynesian model where we're going to print money so that the markets don't come down. We're going to print money so you can say your house is still worth $1 million. We're going to print the money to keep it up there. Now look at this is what they're doing. They're printing the money. That's why you've crashed already 50% in gold. Everybody said, but Mike, you've been wrong about that. You've been saying this same thing for 3 years. Look, in 3 years, your house has come down 50% against gold. Billy Bob sold 3 years ago at the top, sat on the beach, 50% made money on gold, can buy his house back now for half the gold and keep half the gold and still live in the same house. But he's waiting for the big crash. Big crash is coming. Believe me, when the debt bubble goes, nobody knows when. Maybe we got 10 years left. I hope we do. I don't think we do. I don't even think we have 3 years left. That's just my take. Maybe your take's different. Some people don't think we have 3 weeks left. And that's a possibility. Nobody knows. But right now, your house has crashed 50% in real money. Why is that? Because they're printing the fake money to keep you up here, to keep you fat and happy. You see, you guys don't get it. When the stock market goes up 10% and your purchasing power goes down by 20%, you are not ahead of the game. When your house stays up here at $1 million, but in real terms, you've lost 50%, and soon in nominal terms, you're probably going to lose closer to 80%. You're not ahead of the game. You're not winning. Right now, we got the most price reductions in history on the market, on the MLS. It's 18% nationwide. Never, ever seen 18% price reduction. The sellers think they can still get this, but it's down here. And on any day now, when that bubble breaks, oh my God, those sellers, it's all over for them. Just hand the keys back to the bank. But I'm locked in at 2.8%. Well, you just stay there then. That's perfectly fine. You keep paying on that $800,000 mortgage you have when your house value is $200,000. The banks will be very happy. And no one's talking about the banks because the banks are the ones that are going to be the bag holder for all these notes when they get the keys handed back to them. They're not going to be able to print money because that hyperinflate, send gold into infinity. Look, there will be no price that people will be able to buy gold at then. You want to get some now before when you can still trade your fiat money for a gold or silver coin. Look, you can take your shot in Bitcoin, but I think Bitcoin going to be coming down with the dollar. It's tied to the dollar. It's tethered to the dollar, if you will. It's going to be coming right down with it. It's going to be crashing along. A lot of people don't like my take. A lot of people say, you're scaring me, Tall Mike. You're scaring me. And maybe I am. I don't mean to scare you. I just want to prepare you. There's a difference. Give me the thumbs up if you like this. Punch the subscribe button. Get out there, buddy. Have a great day. We'll talk again real soon. Bye-bye now.